Welcome back to Trades and Trends. I am your host, Kyle. We have a few companies to go over today. I want to touch one more time on NVIDIA and some of the progress that they've made since yesterday post earnings. Then we have Dell earnings to go over, as well as Dollar General's. Let's get into it. So NVIDIA, of course, had their earnings posted yesterday afternoon and immediately started to trade pretty strongly downward, ending the day about -7, -8%, eventually recouping some of that loss this morning pre-market hours and starting the day not down too much, but still not off to a great start, before later in the day eventually giving most of that back away again. And now we're kind of back to square zero, sitting around $118 per share as it stands. Now, one thing I forgot to mention yesterday is NVIDIA also has approved a $50 billion share buyback that they will be executing here over, I presume, the coming weeks and months. So it will be interesting to see the effect that that has on their stock price. I mean, realistically, we're only talking about maybe a $2 or $3 per share actual impact based on the market cap value of the company and $50 billion being applied against that. But I still think it's bullish nonetheless, and their earnings was still absolutely fantastic. The numbers were good. Sure, the amount that they're beating their earnings by is shrinking just a little bit, but I still think that's nothing to be ignored, and their numbers are still looking good. So as long as they continue to increase their sales and expand their markets, then they should continue on upwards. But time will tell, and if we can get a little bit lower share price opportunities here in the coming future, then I think it might be an opportunity worth jumping on, maybe in the low 100s, 105, 107, maybe even in the high 90s, 98, 95. We will see. Jumping on over to Dell, we can see they were impacted a little bit by that after hours movement from NVIDIA yesterday, but this morning they were trending back upwards again and had even undone most of that overnight movement and end of session from yesterday. Then traded just a little bit sideways throughout this afternoon. Finally, they posted their earnings and they beat in both categories. Their numbers are great. Their forward-looking forecast is good. They popped up to about 118, 120, looking at about a 7.5%, 8%, 9% gain. And now they've come down just a little bit. They're sitting at about 114, 115 a share, but they did highlight some of the impact of their AI infrastructure and how much it's having on their sales and how much revenue they're gaining from it. And so nothing but positive to be had there. And I think some of that was maybe expected from NVIDIA's earnings and just showing that the demand is still relatively strong. So I like what I'm seeing so far here. Dell is still maintaining well above their 200 weekly moving average, and they're not a crazy amount away from their all-time high. I don't think that's the goal that we should be looking at right now, right this moment, but I think they do have some bullish momentum for the very near future. We even heard it from NVIDIA CEO Jensen Huang, called out that the partnership with Dell earlier this year, saying that they were helping businesses create their own AI factories. Dell said on Thursday it now expects annual revenue outlook to be between $95.5 billion and $98.5 billion, up from $93.5 and $97.5 previously. It also raised its annual adjusted profit per share forecast to $7.80. Demand for its AI-optimized servers rose about 23% sequentially to $3.2 billion in the second quarter. The backlog for these AI servers was $3.8 billion. That is quite the backlog. Now, NVIDIA ended up being one of the most talked about stocks on the street today, naturally, but close in second place was unfortunately Dollar General for not the right reasons. Dollar General shares plummeted today 32.2%, racking up the steepest loss of any S&P 500 stock. The discount retailer's stock plunged after its second quarter sales and profits fell short of analysts' expectations. The company attributed its soft sales performance to financial constraints faced by its customers, but highlighted initiatives to enhance the value and convenience of its stores. Dollar General CEO Todd Vasos said the company believes the softer sales trends it's experiencing can be partially explained by a core customer who feels financially constrained. He said the company is taking decisive action to improve Dollar General's value and convenience for customers. The company lowered its outlook for the full fiscal year, projecting revenue growth of between 4.7 to 5.3%, down from a previous range of 6 to 6.7%, while same-store sales are expected to grow 1 to 1.6%, down from 2 to 2.7% previously. The retailer said it anticipates full year earnings per share of $5.50 to $6.20, but that's down from the previous range of $6.80 to $7.55. I'm happy to see the performance of Dell. I'm a holder of Dell. I like Dell as a company. I like the work that they're doing with AI. I like their products. I think Dell is one of the stronger of the competitors out there when it comes to the PC and the server infrastructure space, but it will rely on continued demand in that sector if the AI growth is what's contributing to most of their revenue, both for NVIDIA and for Dell. Dollar General, on the other hand, I think is a little bit more of a, in my perspective, a long-term growth stock, at least for me. I was trading it just shortly and just so happened to let go of the shares just in time. That wasn't even the reason that I decided to sell them at that time. I was just seeking liquidity for other trades, and so I let those go. I do have other Dollar General shares held elsewhere. I'm still long-term bullish on this company, even if they have these really bad negative 30% earnings. And I'm not jumping right back in to continue to buy at these levels yet either. I'll give it a good 2 or 3 weeks and see if it can inch a little bit lower before maybe I consider averaging down my position a little bit. But I don't like to add to my losers too much, even if I look at them from a investing perspective versus a trading perspective. And sometimes that line becomes a little bit hard to identify. Is this a investment move or is this one of my trading moves? And so I like to even just have a separation of accounts so I can just have some mental clarity around it. But it really all on the spreadsheets, it all blends into one big summary anyways. But I really didn't expect this large of a move to the downside. It's a little bit surprising. I suppose that forward-looking forecast has really spooked some larger holders. Does not make me worried at all. Perhaps it will just take a little bit longer to work its way back above the levels that it was looking at higher previously, but so be it. That is just sometimes the way these things move. So looking forward to more economic news tomorrow. Supposedly it's going to be some pretty impactful stuff. We have core PCE price index month over month and year over year numbers. Both have core and non-core. Personal income, personal spending, all happening pretty early in the morning as well, pre-market opening. So definitely expect a large volatility day tomorrow. Thank you all so much for watching. Please consider liking and subscribing, and I will see you all very soon.